We're talking with Oliver Sloup right now, and he, of course, is with Blue Line Futures in Chicago. And I want to talk about this livestock trade. A lot of talk about the big move in the hog market today. The cattle market hasn't done too much in relationship to what's going on with the hog trade, and there's so much talk now about the spread of that African swine fever in China. Seems like there's no end to this story here, Oliver.
Yeah, there really isn't, but you would think that the prices would just continue to work higher, but we've really seen a very choppy trade and really a range-bound trade over the last month or two, basically between 60, the top end of the range, and 52 towards the bottom end. We really need to see some of these technical levels to get taken out to really get that sustained move higher that we just haven't got, despite these headlines continuing to grow over the past month. Now, 57 is going to be a big closing level for that December contract. If we can get out above there, I think we go retest that $60 level, but that has been a brick wall. It's going to take a lot of momentum to get out above there, but once we do, I wouldn't be surprised to see funds extend their length a little bit. They're only net long about 30,000 contracts, so I think they've got plenty of room to add here. It's just about getting that breakout move technically.
You would think, I guess on the surface, if you have a big rally like that and an impact like that on the hog industry, wouldn't that have a spillover impact just because it's in the meat complex on supporting the beef as well?
Well, you would think so. I know that we're seeing some market volatility in the outside markets. I think stocks are down to 1.25% here early this morning, which could have some impact on potential demand. We also saw cash soften up a little bit last week. So the cattle market really not following through. I think there's probably a little bit more juice in this grape to the upside for the live cattle contract. But I think 116.25 to 116.75 is going to be a big resistance pocket for December. That's the 50-day moving average, a key retracement level, as well as the original breakdown point from last week. So previous support now becomes resistance. That's going to be the line in the sand here in the first half of the week.